Good morning. It's Thursday, December 28th, about 6 a.m. Central Time. Overnight, the precious metals are correcting after yesterday's stronger session. You have February gold down $8 at 20.84. March silver down 9 cents, 24.54. March copper down 3 at 3.92. And January platinum unchanged here at 10.14. So what I believe is underway here and going on in several different markets out there is really some year-end, some profit taking, some harvesting of losses, or some squaring up of positions because you have to execute the trade today so it will settle tomorrow, and then you don't have to worry about it settling into the new year, which could trigger different year-end results and things like that. So people are really going to want to square up positions, focus on taking tomorrow off as it is half day, and then they'll go into the new year with a fresh start. Now, looking at the year-to-date performance on a couple of the metals here, gold up 7.5%, copper unchanged, silver down 3%, and platinum down 10%. Platinum has had an incredible recovery off its lows, about 115, 20 bucks from here, from those lows that we saw in the November sell-off. And then also, if you look at the palladium market, that's been really the one that's been under the most pressure, although that's had also an incredible recovery off of those November lows as well. Now, looking out into January and looking the way things stand, I was reading this report and it was covering seasonalities. And remember that just because when you look at seasonalities, that seasons tend to change. You look at even Chicago, I was just there, it was 59 degrees. It was warmer there than in Florida. So seasonally, that was an outlier on there. So just because something's worked 14 out of 15 years doesn't mean that, it's going to carry on that type of performance. So definitely there are the same risks involved, and if not heightened risks involved. We don't want to have you leaving your guard down just because you read that a seasonal is better or has worked out in the past. So end of this video, there is a seasonal disclaimer. Be sure to read that if you do act on any kind of seasonalities. So looking at, again, on the seasons in the gold market, well, that's one thing that I did read here on the airplane yesterday back to Florida. It was a study put out by the World Gold Council, highly respected. I definitely read a lot of their data. I get their weekend wrap-up, and I love reading it. So since 1971, gold has had, this is in January, this is looking at the past, does not reflect the future, has had an average return, a positive return in January of 1.79%. That's since 1971. Go to closer time since 2000, it's been up 70% of the time, right around those type of results. And then you go back to the 1971, it's been 60% of the time that it has positive results. So 70% of the time, positive results since 2000. Now, something to note is that in 2021 and 2022, if you bought gold on January 1st, you sold on 31st, you lost money. So it was down on both of them. So we did have a bit of a different dynamic over the last 2 years where the Fed was raising rates. We were coming out of COVID. We were at rock bottom on rates, and we should have risen on interest rates. The economy should have reopened. So there were a lot of things that would have put pressure on the gold market, and that type of rotation would have taken place. Now, I think that the dynamics are slightly in favor of gold. Not saying that it's going to be a winner, not saying anything like that. I'm just saying that we are coming into a year where the Fed is projected to cut rates about 3 times. The economy is expected to soften. So some of these are the opposite of what we're expecting in 2022. Now, they do note that portfolio rebalancing is something that takes place right in early January, especially the first week of January for some larger funds that only trade quarterly, semi-annually, and things like that. So you're going to have the rebalancing where they might go into the gold market. You are seeing weakening real yields. And then the third thing is I believe that China is beginning to restock in Asia and stuff like that. But remember, 2021, 2022, gold negative. This year does not mean that it's going to be positive. I'm just telling you flat out that these are the basis behind it. So getting the seasonals out of the way, you look at the market here, kind of a flatter session. I expect it to be kind of choppy. You might see some at the end of the session, some big moves here. Silver market, still bearish trend, hasn't flipped back to neutral. Been bearish trend since that December 4th where it peaked. That was that Sunday night explosion. Gold had that too. That's where it hit the contract high. We got over 26 bucks on silver. It sold off, got down to about $23. $22.95 was the low. And then we gapped up again. And then since then, we've really been completely sideways. So, If silver can get over 24.93, I think that's the breakout point to the upside. And we start to attack that 26 level. We'll see if early January brings that. On the gold market yesterday, last night, very disappointing. We got to 20.98.20, so that's going to tell you that 21 level is going to be a key resistance point. We got to close above that. Then I think we could start attacking some higher levels here. They are factoring in, though. Gold is pricing in 3 interest rate cuts. So you need the Federal Reserve, instead of doing 3 25 basis point cuts, you need them to come out and go, oh my God, the economy is weakening. We need to do an insurance cut where it's about 50 basis points instead. So we'll see if that happens. And then if you got any questions, give me a call. Crude oil down $1. You got the dollar index down 14. Didn't break below that 100 level, but that's kind of the key level of support. U.S. equities are mixed here. 10-year Treasury yields, we've got up 2 basis points, 3.81. So we'll see what happens over there. And then, agricultural markets are mixed. Bitcoin got to 43,000, almost 44,000, and then it pulled back. And then your Ethereum, it actually looks pretty good. On these charts, if you have like a bias on a particular thing, like if you're looking at something like silver and you're like, okay, silver's got to go up, blah, 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 whatever your beliefs are, just look at a chart of it. Forget that it's even silver. Print out 25 different charts. Have your significant other do it. Shuffle them all up and pull it out and go, okay, what's this thing look like? This looks really good. That's an oak chart. Pull out the next chart. This thing looks terrible. That happens to be the silver chart. So trade off of the technicals and then find the fundamentals later, because the fundamentals will price in with the technicals and everything else. So I just think that looking at things with a clean slate is oftentimes the best way and some of the best trades that I've found here. So a couple standouts here. Natural gas sold off, kind of came up, consolidating, poking up. If you know me personally, I hate natural gas, but the chart pattern looks good. On the wheat market, the wheat market's got a nice little chart pattern too, starting to break out to the upside. A little bit of backing and filling yesterday. We'll see if it breaks back out to that upside. That's another nice looking chart pattern in my opinion. So nothing to do with the fundamentals. Fundamentals could be a completely different story, but that's just the way that I like to approach it. That's why I say with silver going up, consolidate could break out to the upside. A little bit longer video. I might not do one here tomorrow. Getting some new office equipment, and my desk is too small, so might have to put a new top on it, and then we can get some more monitors going over here. So, any questions, give me a call, 312-858-7303. Remember, futures option trading involves risk of loss. May not be suitable to all investors. Good luck, good trading.